Hey, what's up, stock compounders? Brad here. So I want to do a fun video today. So Google is the world's largest search engine, okay? So we can really get a sense for what people are thinking about by starting to type in a question and then seeing what Google auto-populates underneath, kind of the auto-suggested search terms. So I decided to type in, should I invest? Curious what comes after that, what people are searching for in terms of should I invest? And then kind of holding some of these different investments up to, how Warren Buffett defines investing. Okay. So you can see here, should I invest now? Kind of a market timing inquiry. Invest in Bitcoin, stocks, Tesla, oil. So we're going to look through all of these different possible investments through the lens of how Warren Buffett looks at investing, because he's probably the world's greatest investor. So there's a cool blog post that I pulled up about how Warren Buffett defined investing from a 2011 letter to shareholders, Berkshire Hathaway shareholders. So I just want to highlight a few points in here. Investing is often described as the process of laying out money now with the expectation of receiving more money in the future. So at Berkshire, they take a more demanding approach, defining investing as the transfer to others of purchasing power now, with the reasoned expectation of receiving more purchasing power in the future. Investing is foregoing consumption now in order to have the ability to consume more at a later date. And then he talks about risk here. The riskiness of an investment is not measured by beta, which is volatility of the asset, but rather by the probability of that investment causing its owner a loss of purchasing power over his contemplated holding period. Okay. Now, there's three major categories of investments that I want to go through. The first is investments that are denominated in a given currency. So money market funds, bonds, mortgages, bank deposits. Those types of investments are often thought of as safe. In truth, they are among the most dangerous assets. Okay, Buffett is pointing here to the fact that their risk can be huge. And remember what risk is, okay? The probability of that investment causing its owner a loss of purchasing power over his contemplated holding period. The second category involves assets that don't produce anything. And it's known that the assets will be forever unproductive. But buying them with the hope that someone else will pay more for them in the future. This is the greater fool theory. And then he mentions tulip mania here, which was the 17th century Dutch phenomena, where people would pay more and more for these varieties of tulips. This type of investment requires an ever-expanding pool of buyers who are enticed because they believe the buying pool will expand still further. Okay, people aren't buying it because they're inspired by what the asset can produce, but rather by the belief that others will desire it even more in the future. Okay, that's the second type of investment. The last type of investment, the one Warren Buffett prefers, is investment in productive assets, whether it's businesses, whether it's farms, or whether it's real estate. Businesses, obviously, the productivity is earnings. Okay, they generate cash through their business endeavors. Farms, you can get cash from farms. You can also get food. So there's kind of multiple productivity routes with farms. And then, of course, you have real estate, which produce cash, if you invest in good real estate ventures. So let's take a look at these Google search terms through these lenses of investments. Should I invest now? That's really just, a timing the market question. Should I invest in Bitcoin? Now, Bitcoin, it seems like you can look at Bitcoin through the first definition of an investment here, which is currency, right? Bitcoin is a form of currency. Bitcoin is also treated as something to buy with the hope that someone will come along later offering more money for it, okay? So to me, Bitcoin fits into the first and second category here. Bitcoin is not a productive asset, okay? There's nothing that's generated by owning Bitcoin, all right? So, that this Bitcoin obviously does not fall into Warren Buffett's kind of preferred investment category. Should I invest in stocks? Those do. That's type 3 here. Stocks are a partial ownership share in a business. So that would fit. Stocks. Should I invest in Tesla? Now, Tesla, the important thing you have to understand when you're investing in businesses, through the filter of Warren Buffett, is these assets should have the ability in inflationary times to deliver output that will retain purchasing power value, okay? Now, also up here, you've got to look at risk. So the probability of that investment causing its owner a loss of purchasing power over the contemplated holding period, that's the risk. So when you look at a company like Tesla, you've got to ask yourself, how much expected earnings, what's the future expectation of Tesla? And how is that built into the price of Tesla? So if there's higher expectation built into the price of Tesla than what's actually going to happen moving forward for Tesla, then you have a risk of losing money, okay? So really here you have to kind of come up with your own intrinsic value of Tesla based on a reasonable future, right? A reasonable outcome for what's going to happen with Tesla moving forward, okay? And you have to compare that reasonable outcome with the price of Tesla and what the price of Tesla indicates about, what people are expecting of Tesla moving forward. So that's really where the intrinsic value assessment comes in. How does the intrinsic value of Tesla today compare to the price of Tesla? And I would argue that, if Warren Buffett were valuing Tesla today, of course he wouldn't value Tesla today because it's not in his circle of competence. He doesn't understand the business of Tesla well enough to be able to come up with an intrinsic value. That's my estimation that would be the case. But if he were to be able to value that company, the price of Tesla would have to be significantly less than the value he came up with, okay? So keep that in mind when you're thinking about buying Tesla. Tesla is the #1 stock on Robinhood in the last week. There are more Robinhood account holders who have added Tesla to their portfolios in the last week than any other stock. So to me, that indicates Tesla is so popular right now. People have such high expectations of Tesla. And as expectation of a stock increase, typically risk also increases. Because risk is really just driven by how much you pay for an asset. If you pay too much, your risk of losing money goes up. So that's how I would think about Tesla, and how I am thinking about Tesla today is, this huge run up in price, like a 6x run up in price over the last year. To me, it's overpriced, and that just increases the risk. Should I invest in oil? Is oil a productive asset? Well, it is in a sense that if you burn it, you can do work, right? Um, so there's different ways to look at that. Are you investing in oil companies? Are you investing in companies that extract oil? Are you investing in oil as a commodity? There's a lot of different ways to invest in oil. So I would need more information about that question in order to put it in one of these baskets, in one of these three types of investments that Warren Buffett was talking about here. Should I invest in airlines? Well, let's look back at these. Are airlines productive assets, businesses? Well, the question there goes back to Tesla. Is the value of a share of an airline stock more or less than the price of a share of airline stock? Obviously, Buffett sold off his airline stocks back in March and April. It sounds like is the best estimate of that. So obviously, Buffett was looking at airlines thinking, boy, I'm not very bullish on the future prospects of these airlines. The ability of airlines to increase their earnings moving forward. Buffett thinks, because of what's happening in the economy, what's happening with the pandemic, ownership in airline stocks, you're going to have returns that are impaired moving forward because of what's happening with the pandemic and people's reluctance to fly. So, my sense in terms of how Buffett was seeing airlines is that risk has gone up. Risk of losing money has gone up. Same thing, airline stocks. Should I invest in the stock market now? Again, that's a market timing question, not really a type of investment question. Should I invest in bonds now? Now you can see here bonds is in the first category. Investments that are denominated in a given currency. Okay, obviously with where interest rates are, bonds are very risky now because when you buy a bond, well, first of all, if you're buying any kind of safe bonds these days, the return is going to be incredibly low because interest rates are very low. So essentially when you buy a bond like that, you're locking in that low rate of return. Okay. And if interest rates increase, those long-term bonds where that low interest rate is fixed, they actually go down in value if interest rates increase. So it doesn't seem to me to be a great time to buy bonds because interest rates are so low. And then should I invest in gold? Just like Bitcoin, gold can be a currency. It can be a hedge against inflation. So currency, risky. You look at the long-term return on something like gold, it's very low compared to stock market returns or even bond returns. It's not a productive asset. When you own gold, there's nothing that you're generating from owning gold. So either you're investing in it because you think you can use it as a currency in the future, you're using it as a hedge against inflation of the dollar, or you're buying it because you think someone else will come along later and offer you more money for it, which is really the speculators kind of investment category, this second one here. So that's kind of how I would filter these, top things that people are searching for about investing through, Warren Buffett's investing framework, one of the greatest investors ever. So I thought that would be an interesting exercise. Let me know what you guys think of these investments. Are you investing in any of these things? What do you think about timing in terms of investing in the stock market? If you're investing in something like an S&P 500 index fund, are you trying to time the market? Whether you think the market is really high right now and so you're not putting money into your index funds, or whether you don't try to time the market and you make kind of automatic contributions every month or every quarter or every year. Curious to hear from you what your approach is with those things. But I just thought it'd be an interesting exercise to look at. What are the top search terms for should I invest? What are people thinking about investing in? What are people looking for answers around in terms of investing? So that's all I got, guys. I will see you in the next video. Take care.